let's start this webinar about biodiversity for investors. We will take a look at examples of goodwill and the investments and cash flow into goodwill projects. Then we will take a look at profitable investments and what's the difference in between the two. Let's start with goodwill. It's about cash flow that comes from organizations to conservation or restoration projects. So we are talking about preserving elephants, preserving seagrass for carbon absorption, planting trees, and so on. The types of cash flow are the following. It's about donations. Second type is CSR budgets, meaning corporate social responsibility budgets of companies. And the third one is grants. So these are the cash flows from organizations to restorationists to conservationists. There is no collateral. What I mean by that the donors do not expect any money to get back, either in form of regular interest rates or coupons, or in terms of sale of the original investment, such as purchase of land, such as helping an NGO do the conservation work. There is no exit. So, like I said, the donors have no expectations on getting any money back. So there is no exit. However, the result of goodwill projects is there is perpetual conservation, meaning continuous improvement of habitats or preserving habitats. The practical consequences of goodwill projects is twofold. The first one is you can earn biodiversity credits and carbon credits if there is carbon absorption going on. The second is you can pimp up your sustainability reporting. Now, annual reporting must be made every year, as it suggests for organizations. Large enough organizations have also sustainability reporting. So in the sustainability reporting, you can show what projects have you invested in or given money to, and what were the respective credits, either carbon or biodiversity credits coming from that. There can be also other bonuses or positive impacts of goodwill, and that is improving PR. It is perhaps increasing morale of staff, and so on. Now, that was about goodwill. The second type of pouring money into habitats is green bonds, which are profitable investments. Three conditions that must take place for a profitable investment through bonds is that there has to be revenue from the project throughout the life cycle of the project. There has to be collateral, and there has to be a credit stream, which translates into coupons. So let's talk first about the revenue coming from these investments. There are two or a couple of major types of projects, and that is forestry and ecotourism. So if you have a forestry connected bond, you get revenue from timber production, from selective tree cutting. There can be national or regional budgets from governments that will help preserve forests from tree cutting. We've had that in Sweden, for example, for a couple of years, where forestry companies were eligible to apply for money so that they would preserve forests and not chop it down for timber production. Credits sale can be done both for goodwill and can be done for profitable investments through bonds. Let's say you are earning credits through planting trees or conserving seagrass, both in terms of goodwill and in terms of profitable investments. You can sell these credits to companies which have net biodiversity impact. So let's say there is a company that needs to immediately offset its impact. They can buy these credits from organizations which have periodically created positive biodiversity value. So these are credit sales. Now, the last but not least revenue stream in case of bond investments is land sale. Land sale sells also as hard asset and hard collateral. So this is the way how you can exit through land sale. Now I've spoken about the word collateral. So what is collateral? In this case, you need a hard asset which the investor is being protected if there is mismanagement of land or if there is a natural disaster. Let me give you an example. There are a couple of risks which can endanger a bond. That is, a forest burns down. That is, invasive species attack that area and decimate the forest. A pest spreads around into the area and decimates the forest. This obviously brings down the value of the forest and its capability to generate biodiversity credits because it's been destroyed. So that's a couple of risks. Now, another type of collateral is contracted revenue stream. What is contracted revenue stream? Let me give you an example. In United Kingdom, there is legislation called Biodiversity Net Gain. It demands, for example, from developers of buildings to create 10% or more net gain throughout its projects. Now, constructing building and infrastructure has obviously net negative biodiversity impacts. And therefore, there has to be compensation done somewhere through upgrading degraded land or through improving monocultures into diversified forests and so on, which creates demand for biodiversity credits, which creates possibilities for restorationists and conservationists to do their activities. So this is United Kingdom example of biodiversity net gain legislation. Now, governments can create contracts in between organizations such as forestry companies or hydropower companies that they will enhance ecosystem services. That will generate, again, biodiversity credits and potentially carbon credits if there is a carbon absorbing activity going on. And last but not least, like I've spoken about, is timber supply agreement. If these exist, they can be used as collateral. Now, what is a bond? Bond essentially is a loan. And that loan, as any other loan from a bank, needs a collateral. The other aspect of a bond is that it creates regular kickback in the form of coupons. These coupons are generated through revenue, and the revenue must be a credit stream through continuous improvement of biodiversity and thus generation of biodiversity credits. These credit streams are essential for investors because they need to know when and how much do they get repaid. Let me come back to the risks. Let's say you invest into a coral or marine project, and corals are present. They can bleach over time and fall apart. Let's say you invest in a forest. Again, it can burn down, it can be attacked by pests, and it can be attacked by alien species. This is where now an attention to my map and screen becomes of interest. Now let me zoom in a bit. So let's see if you can see my texts on the screen a bit better. Where I am is a web page called app.gaia.eco. You can enter it through our main landing page. You sign in, you create an Illuminum account, and then you can end up in the app. Please do so. Please do create an Illuminum account because you will end up on our mail list, which will allow me to update you about what's going on, both in terms of added value and in terms of updates in the app itself. Now, I have a bunch of points on the map. I am in between Copenhagen and Malmö, so this is Denmark and Sweden we are looking at. I have searched for hashtag invasive alien species in the Nordics, and that has rendered 194 species all at once. So I can, on the map, filter these species, but what is more interesting is to see the presence of the species. So each of these dots is an invasive species that has been spotted. You can open up any point. Here I can see giant hawkweed. Here I can see American mink. Here I have this fish, northern pike. Now, these are alien species according to our AI. Because I searched for alien species, it will involve plants and it will involve animals and potentially fungi. All right. Here I am in United Kingdom, and what I have searched for is invasive alien plants. So here I'll have mostly plants going on. So why am I showing this to you? Yeah, because like I said, if you're investing into forest-related projects, you want to pay attention to invasive alien species, pests, which attack boreal forests in Nordics. Again, our AI will look up which pests are troubling Nordic forests, boreal forests, list those species, and give you observations within the time period which you are searching. So Gaia understands the tree of life. It understands properties of species, such as invasive in a certain area or endemic in a certain area. And then you can display all those species on the map like I have. Let me zoom out so that you would see that I'm in United Kingdom. And here a familiar shape of England takes place. So that's about pests and invasive alien species. Okay, so Gaia Map is essentially very useful for this purpose. Additionally, with Gaia, you can create economic valuation of ecosystem services. This will be again useful for estimating the properties of land. Now I have only now I have only invasive species in United Kingdom, but let me show you how it looks like. Here I have a search. No, here I have an input to AI. So here I can type in do a financial valuation of ecosystem services provided by species which you have found in United Kingdom, because I have a bunch of results in United Kingdom. So let's ask AI, what does it think about the value of these species? Okay, 17 alien species found. Let's see if they provide any ecosystem services which can be quantified in terms of money. So there are cultural services, regulating services, and here comes money. So we will take a look at this in detail in the coming workshop, which will be in 1 week. So we will take a look at endemics and their ecosystem values, but even invasives can have some kind of impact on the ecosystem services. Now, Last but not least, before I open up space for questions, is why would anyone bother buying a bond or a green bond at that? And the reason for that is it's a financial product which generates more value over time. So, like I said, a bond is essentially a loan which gives you a kickback in form of credit streams. These credit streams and revenues are again from timber activities, ecotourism, or protection budgets from governments, or land sales to regional governments which are interested in conservation of that piece of land or forest. So this is the reason, because and the advantage to a fund or equity is that there is less risk compared to fund and an equity. It also grows, or the kickbacks are a bit slower or lesser in terms of what money you put in, but there is less risk.